So non-custodial wallet versus custodial wallet. Some of you know it like self-custody. Which one should you go for? There's an aspect of this technology that lies in the heart of why people really get excited and say something about the power of crypto. So it's very easy for you to be carried away, for you to take your money out of your exchanges. What happens when you forget your recovery phrase? It means that once you forget your recovery phrase, you can never get access to your fund. No matter how much you have, if you have $100 million, it doesn't matter. Once you can't remember your recovery phrase, you can't get access to your fund. So this recovery phrase are more like your password, but this time around, you have like keywords you can have: Lagos, Abuja, Kasina, Kaduna. So you put all this together to recover your assets whenever you want to. So why do you have to keep? With the recent events in the crypto space, people are beginning to weigh the options: custodial services or non-custodial services. Depends on what works for you. So stick to what works for you and make sure you keep your funds safe. So I'm here to ensure that your funds are always safe at all times, to educate you on things you have to know and how to go about it. So I'm going to talk about custodial and non-custodial wallet. What does that mean? I'm sure if you've used cryptocurrency before, you've probably interacted with the wallet system. The wallet is supposed to be a tool for you to be able to access your funds on the blockchain. It's that simple. Most people have the misconception that the wallet is actually where your money is stored, but it's actually the tool that allows you to access your funds and carry out transactions on the blockchain. You should understand it that way. So what happens is that we have the private key and the public key. So the public key, you should think about it as a bank account, and the private key, you should think about it like a PIN. Private PIN, where you carry out transaction on your debit card or your credit card. So what happens is that you need these two to carry out transaction. So if you have the account number and you know the PIN, you can actually take out your money. So that means on the blockchain, if you know the private key and the public key, you can actually take anyone's money. So when you're giving your money to an exchange, you're actually giving them a private key. That is the reason why you've been hearing the word: if it's not your key, it's not your fund or your money. So the idea is to be able to decide which option should you go for, custodial or the non-custodial. As other people call it, self-custody, meaning you're actually in charge of your funds, while the other one, you're actually giving it to a third party or ensuring that a third party safeguards your funds. So which do you choose? Do you trust the third party or do you trust yourself? Same question is, do you trust the bank or do you trust under your mattress? So whatever works for you, good. But the idea is to safeguard your fund at all times. So you see the trade-off. So the trade-off here is either safeguarding it yourself or trusting a third party to safeguard your assets. So they all have pros and cons. When you give your crypto to a custodial service, you're also handing over your private key to them with the hope of them keeping your funds safe. So you're trusting them the same way you trust the bank when you hand over your funds to them. So you can sleep well at night without worrying about all those other technical issues like security and all that. When you're non-custodial, that means you're in charge of your assets, ensure security at all points. But think about self-custody, non-custodial as the guys who don't take money to the bank. They put money under the mattress. You're practicing self-custody. That's what it means. It means that if that money is stolen, you have no business reporting to the bank because you are the one in charge of protecting that money. But if your money is in the bank and a branch is actually robbed, it technically means that your money is still safe. The bank has to provide that money in custody of your funds, because you're not in custody of your funds, it's the bank. So the bank owes you that responsibility of refunding your money. The same thing that happens to custodial services. If Binance is hacked today and all the crypto is stolen, you will expect Binance to provide you your funds because it's custodial services. They promise you that they're going to keep your money safe. In a situation where the money is gone, they're going to provide it to you. So you can see the differences. Like I said, custodial services are always easy to use for newbies or new users because they have great user interface. It's easier for you to navigate, and they also have support in case you have any issue. But for the technical people or more advanced users, they're okay using self-custody or non-custodial service. So custodial service also gives users peace of mind, which means that a loss of password doesn't translate to losing funds. Unlike self-custody, if you misplace your key phrase or recovery phrase, your funds are gone. No matter how much you have, if you have 300 million, 500 million, those funds are gone. You can't recover them. But the good thing about custodial services is that you can recover your password and you can get access to your crypto. So usually the custodial service requires a great deal of trust, which means you have to do your homework before you hand over your crypto to any exchange. So the KYC is know your customer, and that means you have to know who you are. The AML is anti-money laundering verification, so that when you're carrying out a transaction on the platform, if the AVI comes in and say, who is this person, they can give you up. What should I expect when I hear the word custodial? Custodial means you're giving your cryptocurrency to a third party with the hope of them keeping it safe for you. An example of that cryptocurrency exchange is Binance, Coinbase, Kraken, OKX, etc. So for non-custodial service, you can talk about services like Metamask or Trust Wallet. So what's the difference between the two? It means for Trust Wallet and Metamask, you have full custody of your crypto. For non-custodial wallet, full custody, which means beginners are not able to use those kind of services because it requires a little level of technical knowledge for you to be able to, successfully manage those wallets. Just a little bit of technical knowledge. That's why beginners tend to push towards custodial services like Binance, because the user experience is more easier. It's easier to onboard, it's easier to get support. But for non-custodial service, there's no support. You just have to manage your crypto yourself. Or if you're using a custodial service, you don't have to worry about security. You don't have to worry about what happens to your crypto. But the recent occurrence in the crypto space has made people start thinking twice. Should we trust the custodial services? The same question I normally ask. Should you trust the bank? What if you go to the bank and you want to withdraw your money and they don't have it? What's the chance of that happening? What's the chance of going to your crypto exchange and you try to withdraw and the money is not there? So exchanges like Binance has created something called proof of reserve, which means you can easily see how much they have at all times, putting an extra layer of transparency to your business, which makes it easier for users to build more trust rather than just assuming that their money is there. So think about you seeing all the amount deposited in your bank at all the time. It allows you to sleep well at night without assuming that the bank will run away with your money. So the more transparent the system is, the more users will build trust. So the whole idea is for users to have more trust in the system, allowing users to build trust and also able to verify that these informations are true. So they don't just have to tell you that they have your money, you can also verify that your money is actually intact. The whole idea of the cryptocurrency is to verify. Don't trust, but verify. You've heard what happened recently with FTX, where they misuse users' funds, allegedly misuse users' funds. So to avoid issues like that to happen in the future, there has to be an extra layer to ensure that that doesn't occur again. So the trade-off of custodial and non-custodial wallet always lies between having the responsibility of safeguarding your crypto versus having direct control of securing or protecting your cryptocurrency.